Welcome back to Market Cafe right here on ET Now. And it was the Lok Sabha that actually passed an all-important bill that proposes to raise foreign direct investment in the insurance sector from 74% earlier to 100% now, besides a clutch of other amendments to insurance laws amid the protest from the opposition. Now, Finance Minister Nirmala Sitharaman, in her reply to the discussion, said allowing 100% FDI would pave the way for further capital infusion, better technology, as well as better insurance products. It would ease the process for global companies to foray into the Indian insurance market without domestic partners, and she said, adding that forming a joint venture is a mammoth task. Let's listen in to Finance Minister introducing the bill in the Parliament and highlights of the bill.
Sir, I rise to move for leave to introduce a bill further to amend the Insurance Act 1938, the Life Insurance Corporation Act 1956, and the Insurance Regulatory and Development Authority Act 1999.
All right, so that's the Finance Minister. But moving on to an ET Now exclusive, my colleague Anurag Shah caught up with the CEO and MD of LIC to understand his perspective on the new insurance bill that has been introduced in the Lok Sabha. And now let's listen to a slice of that conversation.
It has been a great landmark bill that Government of India has introduced for amending the Insurance Act, LIC Act and IRDA Act. It's a great step forward towards making India a Viksit Bharat, towards which the insurance industry has taken the objective of insurance for all by 2047. A lot of steps have been taken. I'm sure that this bill will go a long way in ensuring that we cover the entire population with adequate insurance cover in the days to come.
Because LIC has shown interest in getting into the health insurance business also, and during the result conferences a couple of times it was mentioned that LIC will be venturing into the health insurance business also going ahead. But now there is no clarity on the composite license. In fact, in the bill also there is no mention of the composite license. So how the plan of health insurance business will change going ahead now for LIC?
No, we have been looking at a foray into health insurance only as a strategic investor. We were looking at taking a strategic stake in a standalone health insurance company, and that can still happen irrespective of whether composite license is allowed in India or not. We may have to take some permissions of the regulator and the government, etc., but that does not require a composite license to be made available in the bill. And we are also expecting a few more clarifications and clarity will emerge over the period of time when this bill is being discussed in the Parliament. And ultimately, when it gets passed, the IRDA as a regulator will have more powers to come up with regulations which can take the industry forward in a very big way. So we are looking forward. We are still looking at various opportunities available before us, including taking a strategic stake in a health insurance company, which we have not fixed any timeline immediately, but we'll be working on it in the days to come as well.
Okay, sir, the plan is on. There is no change in the plan.
No, there has not been a change in a plan. We were looking forward to the provisions of the bill. Now that the bill has been presented, we'll look at various opportunities available before us before taking a final call on that.
Okay. So according to the bill, IRDA is now more empowered on commission structure, rewards and commission and remuneration. So that will have any kind of impact on the LIC, or it's for other insurers and other intermediaries?
As you are aware, Anurag, LIC has always been a totally compliant organization, and we have been almost setting the benchmark for the industry in many areas. In fact, since we have been operating even before the IRDA came into existence, many of our practices became the benchmark for the regulations that came into existence. LIC has never been following a very high kind of a commission structure, and we have been having a steady kind of commissions for the policies that are being sold through intermediaries. And earlier also, if you remember, IRDA had a separate regulation for commissions, which was subsequently modified, and it was brought under the overall expenses of the management of insurance companies regulation, and there was the separate cap on commissions were removed. Now that the government is of the view that IRDA can be empowered, or rather more powers have been given to IRDA to bring in separate regulation if required, capping the commission or any other form of remuneration that can be paid for distribution. It will be in the interest of the customers. That's what we strongly feel.
All right.